what certain people are saying. Thank you for that recording. But when you're talking to the client, it's very specific in what we're also not allowed to do. And that's what our licenses dictate for us. So if you had a series license, which allowed you to buy, sell, or trade stocks, bonds, and mutual funds, you're allowed to talk about that. And you can say whatever you want. And as long as you can prove you're not harming your client, or you hedge it enough where you're not really guaranteeing a response, you've got the ability to say what you need to say to try and cause your client to take some action, which is to buy, sell, or trade. Our licenses, our life license, allows us to market and sell fixed index annuities. So we're allowed to talk about that. We can talk about the fact that they'll make money if the markets are growing. We'll talk about the fact that your client's money will be protected against loss. We can talk about a possible reduction in fees or income streams or legacy protection. Our life license does not allow us to provide an opinion or a recommendation to buy, sell, or trade stocks, bonds, or mutual funds. That's just what the license does. Now, some people want to go out and do that. And if you want to go out and do that, go right ahead. You'll never catch me doing it. I'll tell people right up front the following. And Josh, since we engaged, I'm just going to go with you. Okay. Josh, I know you're asking me questions about what I think about certain things that's in your, portfolio at ABC Securities Firm. I'm not licensed to provide that advice. But if you just want some general thoughts, I can tell you what I think. I can give you an opinion based upon what I'm reading and what I'm hearing. For example, I know that Jamie Dixon, president and CEO of JP Morgan Chase, has said multiple times, and you can Google this, you can go on the internet, you can find his comments. There's a lot of news articles on this. He has gone on the record, and he went on the record early January this year, before the market crashed in January, and said, I think it's going to be a tough year. And then January went down 13, 14, 15%, somewhere in that neighborhood. Okay. He came back in June and he doubled down on it. He said it again in July. He said it again in October. He said it again last month. October, November, he said, I think the market could go down another 10 to 20% by the end of the year. And if you compare what that's going to do now versus like 1929, 1954, 1987, 2008, it's going to be as bad or worse, because we're talking about a larger market and more money being at stake. It's not going to be just about the market went down 10%. 10% in 1929 maybe meant you lost a few $1,000s. 10% today means you might lose a few $100,000. The fact that you've grown your portfolio means you got a lot more at stake. Does that make sense? And then I'm asking Josh, if he's a client, if that makes sense. And then I can come right back and say the following. I'm a proponent that if you're willing to risk your money in the market, you should listen to your broker. But I also believe you should only have in the market the money that you're prepared to lose. So so Josh, you're showing me a portfolio that's got about $500,000 in it. If you lost 10% of your money, if you lost $50,000 and it never recovered between now and when you decided to hang it up or retire, are you okay? Can you stomach losing that $50,000 if it never came back? And Josh is going to give me a yes or a no. Let's say he said yes. Perfect. So the other $450,000, Josh, represents money you're not willing to lose, correct? I get another yes there because my answers are designed to find my yes response. When I get the yes response on that 450, now it's real simple. Josh, what I want to do is review your statement, which I'm legally required to do. No different than if you go to Merrill Lynch or Edward Jones or Fidelity or any of those guys. We operate the same way. We're legally required to review that. I'd like to show you ways to protect that $450,000. So now you're going to get the best of both worlds. You can leave your money in the market that you're willing to lose. And if you only leave the 50,000 there, that's your worst case scenario. And then I'll show you some options on the 450 that you're not willing to lose. So we know that you can't lose, but still gain when the markets come back and rebound, which they're saying is probably going to be sometime in 24. They're not expecting 2023 to be very good. Does this sound reasonable to you? And again, I want a yes answer. The instinct of the person sitting in Josh's chair is to listen to me talking like a human being that cares about what he's saved, that cares about the money that he's made. And all I'm doing is saying, I want to help you protect it. I've not provided any advice because I honestly have nothing to provide. I haven't reviewed his statement. I've talked about that which we can Google and that they can Google on their own and verify that that's exactly what we're saying. Now, why is this important? It's important for two specific reasons. Number one, the law says we're not allowed to talk about what we're not allowed to talk about. Number two, if you provide advice, especially if it's in the arena of where we're not allowed to talk, and that client or prospective client acts on that advice and it fails, they can sue us. And there is no court in the land that is going to say we are not liable for damages. And if the damages are large enough, you're going to spend time in jail. You lose your license. You will be barred. You will pay penalties. You will pay fines. FINRA gets involved. If the damages are large enough, now you deal with the SEC. Why is this important? It's important because we've chosen this as a career path. So our job is to protect families. Our job is to provide advice where advice can legally be provided. Our job is not to make somebody feel good and get them to think that we know something that we're not supposed to talk about. So translated, we need to understand how to stay in our lane lines. If I'm talking to Chris Ball and he's specifically asking me questions and he's saying, what should I do here? What should I do there? Hey, Chris, you know what? You're asking me some things that I don't really provide advice on. I can show you how to take care of some of that through some other factors. I can also refer you to a partner of mine who is licensed to actually answer those questions appropriately for you. Why don't I get a copy of your statement? Let me set a follow-up appointment for next week. I will have my partner with me and the two of us will take care of you, respective to what we each can do without, providing any damage to you, which is important to me. Is that fair? And I want Chris to understand that all I want to do is provide help, because sometimes you have to say, I'm not the answer, but I know somebody who is. So Josh, I don't know the answer to that question, but I have a partner of mine. Her name is Paola, and I know she's got answers. I'm going to reach out to her and have her give you a call directly. When she calls, take her call, and she'll be able to answer that question for you. And then whatever we need to do to resolve that concern for you, we're happy to work together to help that out. Is that fair? And I'm consistently asking the question, is that fair? Why am I asking if that's fair? I'm asking if it's fair because I want them to understand that I'm being reasonable. I want them to understand that I'm not trying to sell them anything. I'm simply trying to educate them so they can make a decision. If I educate them properly and I show the value in what I'm bringing to the table, I'm going to do business. Now, to me, doing business is not selling something. Doing business is protecting a client's assets. And assets come in two formats. One format is financial capital. How do you protect financial capital? FIAs. The other format is human capital. How do we protect human capital? Life insurance. Now, when you're talking about protecting human capital, I'm not here to protect Josh by Josh buying life insurance. I'm here to cause Josh to understand that his wife and his 4 children, and I have no idea how big his family is, But I'm making sure that that family is protected. That's the human capital we're protecting. Josh's investment of $200 a month in that $1 million policy is providing human capital protection so they don't end up on the streets, so that they can grieve and not worry about how they're going to pay the bills, so they can learn how to live without their husband or their father or their grandfather. I mean, Josh is a young guy, but who knows, right? On the fixed index annuity side, that's financial capital. It's still the same concept. Protecting Josh's financial capital does two things. Number one, it ensures he's got money when he decides to stop working on his terms. And I talk about it that way. I don't talk about retirement. I might mention the word once in an appointment, but then I pivot and say, let's be real. Retirement today is not what it was 30 years ago. 30 years ago, my dad retired. He got a gold watch. He gets a guaranteed pension. He runs off into the sunset. Today, retirement is, have we saved enough money individually to be able to stop working when we want to stop working? I don't want my boss, Glenn, to say, hey, you're 65, you're out. I want Glenn to value what I still bring to the table. But I want to be the one going to Glenn saying, hey, Glenn, you know what? I'm tired. I don't want to work anymore. I've got enough saved. I've done my planning. In 90 days, I'm going to stop working. I'm going to retire now on my terms. What do you need me to do to help start training somebody to replace me? Now I want to provide value to the boss who's going to lose me forever. So when you're talking to that person on their financial capital, it's how are we helping them to save so they can stop working on their terms? And we're never there on day one. Everybody's working with a person. They've all got a broker. They've all got a securities firm they're working with that is helping them to build that nest egg to get them to the top of the mountain. At the top of the mountain, they want to say, sayonara, I'm out. But when they get about 80% of the way up the mountain, that's when things start to get a little nervous, because now they want to know they've saved enough. Now they want to know they can actually stop on their target retirement date. Now they want to know when they're on the other side of the mountain, walking down into the sunset to be able to spend their days doing whatever they want. They want to know they're not going to run out of money. Our job starts before they get to the top of the mountain. And we have to be able to talk about that value. But we need to understand talking about that value means providing guidance that we legally can provide. The worst thing that can happen to you is not that you've lost a client or that you did not cause a sale. The worst thing that can happen is that you do something and your license is put at risk because you don't know the rules. This is my opinion. You can think any way you want, but I can tell you in 38 years, I've never had a claim filed against my license. In 38 years, I've solely focused on helping the Joshes and the Paolas and the Glens and the Rodneys and the Dallases and the Chris and the Steves and everybody else. I don't care who you are. If I can help you, I want to help. If you don't want my help, that's okay. I'm going to move on. And when your mindset gets to a point that you're not going to help everybody, helping people becomes more fun and it becomes easier to do. And you're actually going to help more people because you understand you're just not going to help 100% of the people you sit in front of. So it's important to understand that the rules are designed to keep us in our lane line. Those rules are designed to make sure we do the right thing no matter what. So if you can come away from today understanding what your lane line is, the question you need to ask yourself every time somebody answers or asks you a question is, do I know the answer to that question? And am I legally allowed to provide that answer? Or do I have to hedge it to say, I need to go confirm what I'm saying? So Glenn, that's a great question. I can tell you what I believe the answer is, but I honestly don't have a license to give you a legitimate answer because I don't focus on that part of our industry. But I've got a partner of mine, his name is Chris. I'm going to call him now and I'm going to see if he can get on the phone and talk to you about that. Is that fair? And again, I'm looking for a yes answer. But what have you done by saying, I believe I know it, but I'm going to get somebody on the phone? You built value with Chris. You built value with Glenn. You built value with whoever that client is, because they know you're not going to steer them wrong. You're building clients for life, not clients for, I'm going to have a close, I'm going to make some money, and I don't have to talk to them for 12 months. I probably make 300 phone calls a month, just checking in with existing clients. How are things going? Is there anything you're concerned about? Is there anything you need me to look up for you? Do you want to meet earlier than our scheduled appointment in 90 days? How's life treating you? Treat them like human beings. We're all human beings first. And if they know you care at that level, yeah, you're their person, but you're never going to feel like you're just their rep or your agent. Because when you talk to somebody about FIAs and they give you the objection, they've got a guy or they've got a girl that they work with that they've had for 20 years, you're not replacing that person. You're building a new relationship with that client, and eventually you replace them because you provide better value. All of that within your lane lines. That's the important part of today's message. Understand what you can say. And if you're not 100%, hedge and say, let me find out and make sure that the answer I've got in my head is what I can give you. Let me make a quick phone call. Let me reach out to somebody and get back to you first thing in the morning. Because a lot of us, we're going to take evening appointments, and you might not get somebody at 10 o'clock at night, but you're running because you got a lot of appointments that day. So it's okay to tell somebody, I'll get back to you in the morning. I want to verify this answer before I give it to you because I don't want to give you the wrong answer. That actually builds value by saying, I got to come back tomorrow to give you the answer. Your instincts are going to be, give them an answer. Your instincts are going to be, convince them that you're the best answer. But your instinct should be, I want to do that, but no, I can do it legally so that I can have a long career. I can build a nice agency for myself. I can build something I can leave to my children, and I can do it without ever having to worry about somebody saying I steered them intentionally wrong because I didn't have a license to do that. Okay. It's easy, if you lose your focus, to put yourself in a position to lose. It's a lot easier to know what you know and to know what you don't know. So you think about what I write on social media. I've got a very simple tagline: when you know, you know. And if you can't instantly answer that statement for yourself, don't provide any response. Say, let me get back to you on that. I want to verify what I think it is. Because eventually you're going to get the skills to be able to do that. You know, I've been around a long time. Chris has been around a long time. Some of you guys have been in this industry for a very long time. But a lot of people in this industry are afraid to say, I don't have an answer to that. Let me go get it. And what I'm going to challenge you to do is be okay with the, I don't have an answer to that. Let me go get it. Because that's going to build more value for you than you possibly could imagine. Okay. The federal government came out last year with a mandate for every state called best practices. Those that are writing annuities are very familiar with this. Certain states have rolled it out. Ultimately, all 50 states are going to have it rolled out. Best practices simply means exactly what it says. We have to do the right thing at all times. But it also does certain things. Specifically, if Dallas is a member of my team and Dallas goes out and does not do best practices, and Dallas gets sued for doing the wrong thing, I'm Dallas's upline. Guess who also gets named in the lawsuit? I do. Paola is my upline. Guess who gets named in the lawsuit? She does. Okay. Now that statement is not meant to scare you guys out of the industry. Let's be clear. It is meant for you to have a conversation with people on your team and regurgitate what we're talking about today. Make sure they understand that if they do something intentionally or non-intentionally, and it gets them in trouble, you also could be pulled into that. It's no different than who's responsible for our downline if they have chargeback debt with a life carrier. We are. If Josh is on my team and he doesn't pay back commission to Mutual of Omaha on a policy that canceled out, it rolls to me if I'm his direct upline. We have the same responsibility with the advice we provide. So I make it a habit with every new recruit that comes on board. I let them know you need to understand what it means to do the right thing. You need to understand that every action you take is a reflection on my agency, not just yours. And I don't have any intentions of getting pulled into litigation. So this is how we're going to roll. And I set the ground rule for that. If you're not 110% sure and you know 110% of the time that you can say that legitimately and legally, I don't want you to open your mouth. I want you to come back and talk to me. And then we'll get back to your client within 24 hours. If I'm out in the field with Paola because she's called me and said, I want to get more training on an annuity, can you do this one with me? As soon as I take over, rule number one for every agent I train is introduce me. And with all due respect, shut your mouth. Don't say another word until the appointment's done. For two reasons. Number one, I want your client to focus on me because you've asked me to engage with your client and educate them to help protect their asset. But rule number two, which is actually more important than rule number one, is if Paola, who's getting trained, opens up her mouth and says something that's legitimately wrong, and Josh, the client, takes action, I am just as much in trouble as she is. That's just what the law is. So my rules are very simple. I'm more than happy to help an agent, but if an agent can't keep quiet, I might not do more than 1 or 2 appointments because I'm not willing to put my license at risk because the agent who's getting trained is not willing to follow the rules to learn how to do this legitimately, which is going to be better for their clients. And I'm very clear about that up front. I'm not going to do anything that's going to cause my license to be in jeopardy, no matter how much somebody else wants me to do that. I've walked away from business. I have terminated agents' contracts because they won't learn and tell them, go find another IMO. I don't want you here. I don't want you. You want to be here, you can go into someone else's team. I don't want any more responsibility for you. Okay? Your license is tantamount to your ability to make money in this business. Your ability to connect with the people you're going to try and write business for is solely dependent on your legal ability to have the conversation, have it make sense, and give yourself an opportunity for them to feel like you are valued and trusted and are the advisor they want to work with. Anything outside of those lane lines, you're going to have issues. And again, this isn't meant to scare anybody. It's meant to cause people to understand that we have rules we're expected to follow. And a lot of people don't understand those rules. Okay. On that note, let's see if we have any questions today. We have nothing in the chat room. So if you have a question about this or anything else we've discussed on a prior meeting, feel free to unmute yourself and ask away. How off topic is off topic, Josh?
There's an agent that's trying to write a policy with a business as the beneficiary. Do you know of a term product that allows that? So
the business can be a beneficiary. It's a legal business. There shouldn't be a problem with any carrier.
With any carrier? Okay, he called Royal Neighbors this morning and they said no.
Okay, so Royal Neighbors has their own personal rules on that. I know National Life Group, for example, they don't have an issue. I don't believe Mutual of Omaha has an issue.
Okay.
Okay. Because there's two types of policies. What you're basically talking about there is like a significant policy where you've got an owner or you've got a significant person, president, vice president, CEO, CFO, someone who maybe is a senior sales manager or a sales director or a marketing manager that brings a lot of value. And they want to use that policy as something that keeps them retained, but also provides a dual death benefit. One death benefit usually goes to the family, a portion of the death benefit. The other is usually determined by how much do they think it's going to cost to retrain somebody to replace that person when they die. So if you're a significant person in my business, I might offer you $1 million policy and I'm going to give $800,000 of that to your family, but I want $200,000 to come back to the business, because when I recruit Steve, I believe it's going to take me 18 months and $200,000 between his salary and my time to get him up to your speed. So instead of having to come out of pocket for that, now I got some free money to be able to get that training in place. Okay. So I'm kind of surprised that they said they don't do that, because usually you can show value in that. And honestly, it's the first time I've heard of a carrier that would say no. It's a little different. So I would just have them continue to ask around, because it's pretty standard. That's not a non-normal type of policy. Next question. Anybody?
Hey, David, this is Glenn. I don't necessarily have a question. Just want to say thank you for the information. Like as you were talking, it reminded me of why taking time to train and develop the newest agent is extremely important, especially when they're going out there in the field. And so, I took down a couple of notes. I want to remind my team of certain points that you made. When being out there, and if you don't know, you don't know, and don't be afraid to reach out for that lifeline. So just want to say thank you. Looking forward to being on many more calls. And good morning to you, or good afternoon to you guys, wherever you're at.
Absolutely, Glenn. Thanks for those words. Yeah, you think about any brand new agent in this business, what's the first thing on their mind? I want to go out and make money. What's the second thing on their mind? I want to go out and prove I know what I know. What's not on their mind? I have to be humble and admit what I don't know. So Glenn's comments are very real. Okay. The studying that we make to pass an exam, it's my personal opinion that not a whole lot of what we have to study to get our license is actually used in the field, which means we have an obligation, if we want to build an agency the right way, to invest in these new agents with our time, with our effort, with our energy, so they understand how to roll out appropriately and legally. And like to Glenn's saying, if we spend our time actually making sure they understand, no one's going to look at you sideways by being humble enough to say, I don't have the answer to that. I'm going to get it for you, though. They're actually going to build a better business for themselves. Some of my best referral partners are clients I've never done business with because the answer said I should not do business. Some of my best referral partners are people that have done business with me. Let's say you, Josh, and you go out and you meet Rodney and you're having a cup of coffee at a football game, right? And Rodney starts to just talk about the fact that he's not happy about things that are going on in his portfolio. And Josh says, you know what? I got a guy I met. He did a little bit to help me. He didn't do a lot, but he was so straightforward with what he knew and what he didn't know that I think he's a straight up guy. You probably might benefit from talking to him. Let me give him your number. Now you've got a referral. Because all you want on the referral side is the answer to the following question. Who do you know, Josh, that you think might benefit from having a conversation with me? How non-invasive is that question? Who do you know that think would benefit from having a conversation with me? And Josh, you know what? If I can help them like I did you, I'm happy to do that. But if I can't, I'll be honest about that, and I'll find somebody who can help the person you've had call me. Is that fair? It always comes back to very simple, easy, respect and value building prospecting and word tracks. That's all it is. Steve, who do you know that might benefit from having a conversation with me? That's all it is. They know you're asking for a referral, but you're not asking for a referral in a way that makes them feel obligated. But if you build value with them, if Steve appreciates what I did in that meeting, he wants to tell Chris about me. He wants to tell Glenn about me because he wants them to feel good like he does. And when you make it that simple, the rest of it just, it kind of a disrespectful phrase, but it's not intended to be that way. But it is like taking candy from a baby. If you break it down that easy, you're going to build. You're going to provide value. You're going to make money. That family's going to be happy, and they're going to refer. You can't get in trouble for asking someone to have a conversation with you. And you can't get in trouble when you don't say things that you know you're not allowed to talk about. Just simply focus on providing value. And sometimes the value is, Glenn, I don't have that answer. That's just not part of what I focus on for my agency, but I know some people that do. Let me make a phone call and we'll get back to you tomorrow. That's a value-added statement. And I'm not making any money with that statement, but I'll get a referral. That'll happen. It'll work. Any last questions? All right. On that note, simple reminders this week, next week, we've got the 2 Christmas parties this week in Kentucky and next week in Missouri. We've got some training going on as well. We've got the rest of this week to wrap up AEP. So those of you that need to get to it, let's get to it. If you haven't started to write down your goals for 2023, write them down. Bring them to next week's meeting. Next week, we're going to talk about 2023 and what it means to write annuities and incorporate that into your goal setting for next year. Okay. Have a good day, everybody. If you need me, reach out.